Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on the simple moving average lines, or SMAs. We did a previous video on exponential moving average lines, or EMAs. You can find those videos in both our swing trading and day trading courses on our website. So this video is going to be specifically on SMAs, or simple moving average lines. But before we begin, and you'll hear us say over and over and over in pretty much all of our courses and our content, that the first and most important line of defense when trading is candlesticks, right? Candlesticks are instant. You'll see as I have this chart going up right now, this is showing you real-time price action between the bulls and the bears. Now, each time you see that candlestick form, it's forming a pattern. And those patterns make up smaller patterns, single, double, triple candlesticks, there's single, like reversal candlesticks, and then bigger overall patterns, right, on charts. Now, all of those patterns tell an incredibly important story of support and resistance. And what is support and resistance? Well, it's everything when trading, right? You want to buy low and sell high if you're going long, or if you're shorting, you want to sell high and buy low to cover your position. Now, with indicators, especially, moving average lines and most indicators are lagging indicators. And what that basically means is many, especially new traders, they put too much weight on indicators because they're looking for the secret indicator that's going to make them rich so that they will never fail in the trade. But the fact of the matter is, losses and failing on trades are part of the game when trading, right? The best traders in the world still fail, 30, 40, 45% of the time, right? Because there's no way to predict what a stock is going to do, which means there are no secret or magical indicators that's going to tell you exactly what a stock's going to do. And most of these indicators are lagging, which means they're not instant in real time like candlesticks. So if you put too much weight on them, it's going to be, to most of new traders' detriment. So we want to kind of dispel or put that kind of out there, that disclaimer that don't put too much weight on indicators, especially simple moving average lines. So now that I got that disclaimer out of the way, moving average lines are very popular. So simple moving average lines, incredibly popular when trading. And I'm going to show you a couple of the most popular ones. And they are very important for support and resistance. So while you don't want to put too much weight on them, you do want to keep an eye on them because other traders are watching them, right? They tell very powerful stories of support and resistance. So on my chart right over here, you'll see AGN. I just have a random stock pulled up. You'll see on my chart here, you'll see we did a video on our EMAs over here. You'll see this blue line is the 9 exponential moving average line. And the red line that I have on here is the 20 exponential moving average line. I just like vibrant colors. There's no rhyme or reason why it's blue or red. It's just what I like. For exponential moving average lines, if you don't like the 9 and the 20, some people like just the 13, which is kind of like the in-between between the 9 and the 20. So if you don't like the 9 and the 20, you can use the 13 as an exponential moving average line. People like that one as well, right? So for simple moving average lines, this pink line or purple line that you see is the 50 SMA, very popular moving average line. And the black line is the 200 SMA. The other one that people like to use is the 100. Again, you can add it on if you would like, but the 50 and the 200, probably the most popular. And then also the 100 is also pretty popular as well. And simple moving average lines, they're important on all time frames. The bigger the time frame, the daily, the hourly, to daily, weekly, monthly, extra important. But, intraday, still popular to keep an eye on. Again, a little bit more popular when you start to go into the hourly and the bigger chart time frames. Intraday, you might see you want more instant price action, so you're looking a little bit quicker, more at the exponential moving average lines. But I still have them up on my charts here. This is where, again, you're looking at them as a gauge or an eyeball, not as a foolproof way to trade. Again, remember, they're lagging indicators. But The whole point being with moving average lines and trading in general, what goes up is eventually going to come down. Doesn't mean it's going to crash or anything like that. It just means when a stock gets overextended either way, whether it's overbought or oversold, it's going to naturally want to gravitate back to equilibrium, kind of like a rubber band. So like, if it price, you'll see, down over here. As you can see down in RSI, with AGN, price is oversold. So the bears pushed it down, it got oversold. At some point, it's going to naturally want to gravitate back to these moving average lines. Now, we don't know, right? No one knows. Is this going to get back above all the moving average lines and go up again? Or is it going to hit a wall of resistance, right? Support and resistance, right? So when you start to see price fall, or when you see it failing the moving average lines, it's failing support. Those moving average lines now become resistance. So you'll see price goes up, hits resistance, starts failing. Right here, it's failing, going up, and now it's starting to break resistance. But now you can see up here, it's got the 50 SMA. That's a pretty big wall of resistance. If it can get above that 50 simple moving average line, it might have some room to run, potentially up to the 200. But also remember, there's candlesticks in other areas, again, of, right here. Here's a previous resistance level right here. You'll see it broke it. That's a pretty big area over here. But then you can see there's other areas right in here, which if you kind of zoom over and see, that's the 50. And then you can kind of zoom back out. There's really, there's no coincidence how these moving average lines many a times go back to previous support and resistance levels, right? That's why they're very popular to keep an eye on, because as it starts to move up, you'll see many of times either rejections at those moving average lines or, possible movement up. So again, we like to just stress that candlesticks are the most important line of defense. However, moving average lines are very, very popular to keep an eye on. And you'll see on my Thinkorswim platform, if I just go up to studies, edit studies, you'll see right in here, simple moving average. I also have the 5 on there. I just kind of have it on those purple dots. So it's kind of like more for instant price action or when day trading. It's just another one. I kind of put it there as like an eyeball. I don't put a huge amount of emphasis on it, but I keep an eye on it. But you'll see right in here, the 50 SMA right here, and then the 200. And you'll see if I double click on it, you can come in here and change the color. You'll hear me joke and say, I like more vibrant colors on my charts. Dan likes more muted colors. So if you're muted, have at it. I like vibrant colors. And then you come up here, go to the length, and then you can kind of go up and down. If you want to change this to the 100, you can put 100, or just go and type it. Let's see here, 100. And then you can come down here and press OK and change it to the 100 as well, or change the colors. But that's how you kind of set it up. You go over here and just type in simple. You'll see simple moving average, double click on it, pulls it up here, double click on it. And again, if you want to put 100 or whatever, there you go. And then change the color. And that's how you do it. So again, we don't want to discourage people from using moving average lines because we use them. We just want to, put the emphasis on candlesticks first. Forms incredibly important support and resistance levels, and then these moving average lines, very popular with understanding, again, support and resistance. What goes up at some point is going to want to naturally pull back down. Again, now it's the magical question of when, right? And it doesn't matter what type of trader you are, right? Whether you're intraday trader, you'll see right here, price goes up, it's going to naturally want to come back down. If you're looking more in the daily chart or swing trading, as price starts falling, it's going to naturally want to gravitate back up. It falls back down, naturally wants to go back up, right? Let me look at, right here. Price is up here, naturally wants to come back down. Price is up here, wants to naturally come back down. So again, very, very popular, these moving average lines. So hopefully this video helped you. If you need more help or training, take our courses on our website. So we appreciate you for watching this video, and we will see you in our community. Enjoy.